Hello everyone, my name is Tim Nyland and I'm the Director of Research here at Pacific Point Advisors. 2024 continues to deliver on strength that surprised markets in 2023. During the first quarter of 2024, the S&P 500 and the Nasdaq 100 continued to rally 10.4% and 8.6% respectively. This despite rate cut expectations being reduced from 6 rate cuts down to 3 in 2024. The artificial intelligence rally against a backdrop of rate cut speculation has further narrowed the market leadership from 2023's Magnificent 7 stocks down to what is now known as 2024's Fabulous 4 stocks. With the market leadership continuing to narrow, we've suggested investors view the performance of Q1 2024 as largely momentum driven, resulting in large valuation dispersions, tempting investors to shun diversification in favor of portfolio concentration and near record levels of portfolio risk. The momentum-driven Q1 market leadership can be illustrated with the following performance contribution chart of the Fabulous 4 stocks to the performance of the S&P 500. You will note that 4.9% of the Q1 S&P 500 performance of 10.4% is concentrated in the Fabulous 4 stocks, while the remaining 496 stocks in the S&P 500 only contributed 5.5% of Q1 performance. During this same time period, the stable earnings core portfolio, the blue bar on the far right, posted a well-diversified return of 9.1%. As you might expect, the momentum-driven Q1 performance concentration is even more pronounced in the Nasdaq 100. Here you can see that 6.5% of the Nasdaq 100's 8.6% Q1 performance is concentrated in the Fabulous 4 stocks, with the remaining 96 names in the Nasdaq 100 only contributing 2.1% of Q1 performance. While today's consensus remains focused on the performance of the Magnificent 7 with an emphasis on the Fabulous 4, no sound financial theory suggests that 4 or even 7 stocks constitute a well-diversified portfolio as a core equity allocation for building and preserving wealth. We think investors' rush to risk and concentration in the Magnificent 7 and Fabulous 4 stocks calls for continued diversification with a core equity allocation of quality growth and quality defensive stocks that exhibit superior capital efficiency and earnings stability through any economic environment. Our stable earnings core equity portfolios continue to provide this diversification. The stable earnings portfolios are not momentum strategies making concentrated market timing bets on technology stocks. Rather, the stable earnings portfolios are managed to help investors achieve attractive equity market returns over the long term with significantly lower overall volatility, drawdown, and subsequently lower overall risk. Stable earnings portfolios offer superior risk-adjusted returns over the long term without that concentration risk and associated volatility of the information technology sector or the likes of the Magnificent 7 or Fabulous 4 stocks. From inception on January 6th of 2022 through Q1 of 2024, our stable earnings core portfolio, the blue line, experienced a cumulative net total return of 17.9%, while the Nasdaq 100, the red line, returned 17.3%, and the S&P 500, the black line, returned 14.7%. Just as no one could predict when the 1999-2000 dot-com bubble would burst, no one today can predict exactly when the next recession will occur or when the Fabulous 4 will swing back to equilibrium. But it's exactly that uncertainty that calls for the peace of mind the Pacific Point stable earnings portfolios can offer you when they are at the core of your equity allocation. The stable earnings portfolio management discipline remains consistently applied for over 25 years. And today, we are moving into Q2 2024 with relative valuations for our stable earnings portfolios that are between 1.5 to 2 standard deviations below their 10-year average PE relative to the S&P 500. Stated differently, the current price-to-earnings ratios of the stable earnings portfolios are at their lowest levels in the past decade when compared to the S&P 500. We believe current valuations offer an attractive entry point for new allocations into the stable earnings family of core equity portfolios. Thank you for your continued confidence in Pacific Point.